Welcome back to Alpha Recap. Markets closed for the day, and we're unpacking the moves and what they mean for your portfolio. As always, if you have questions, you can reach us at stockalpha.ai. I'm excited to dig into a tape that was, pretty split. Winners around AI and energy transition, and headline risk in retail, healthcare, and crypto. Tom, thanks for joining.
Thanks for having me. Lots to get through. It was one of those days where a few big stories pushed entire sectors one way or the other.
So, in one sentence, how would you summarize the day?
The market closed with clear leadership in AI infrastructure and energy transition, while consumer, parts of healthcare, and crypto felt headline-driven pressure. So it was very much a selective rally.
Let's start with the winners, technology and energy. Tech led the charge because of AI demand, but Amazon really made headlines.
Right, Amazon announced a $12 billion cloud push, which was the headline money line. That spelled out the hyperscalers' intent to double down on capacity to handle AI workloads. More GPUs, more networking, more colocation. It was a clear signal that CapEx cycles tied to AI aren't theoretical anymore.
And that $12 billion commitment didn't just help cloud names. It rippled into chip makers and data center REITs, right?
Exactly. Think of AI as the connective tissue across multiple sectors. When a hyperscaler spends on cloud capacity, hardware vendors and facility owners benefit. That's why technology, industrials tied to data center builds, and certain materials all outperformed.
Now on energy, there were a few threads. Higher oil forecasts, long-duration storage, and some CCUS activity. Summarize the takeaways there.
Goldman bumped year-end oil targets, which gave energy a tailwind. More importantly, investment interest in long-duration storage players and carbon capture projects was visible. Those are structural plays tied to grid modernization and electrification. That pushed both traditional energy names and storage specialists higher.
Yeah, it really felt thematic. And industrials got a boost from automation news, right?
Yep, there was a standout line. Logistics teams reported a 98% reduction in manual tracking work after agentic AI pilots. That's massive. Real productivity gains that justify CapEx on automation and sensors. Suppliers that can turn pilots into orders are in play.
98%. That's eye-popping.
Honestly, I was a bit surprised by that number. But if it's repeatable at scale, it changes cost structures for logistics operators.
Okay, let's pivot to the losers. Consumer and healthcare were notable underperformers. Start with retail.
Two big hits to retail. First, a new 15% tariff on certain consumer imports landed and immediately pressured import-dependent retailers. Second, bankruptcy financing and restructuring headlines. For example, Saks Global got a $1 billion bankruptcy loan, amplified concerns. Tariffs compress margins, and that shows up fast for chains that compete on price.
Not a great day for exposed retailers.
No. Retailers with strong pricing power or vertical integration fared better, but import-heavy discounters and parts of apparel were under real pressure.
What about healthcare? There was a headline around obesity drugs.
Right. A head-to-head study surprised the market, with Eli Lilly showing stronger results versus Novo Nordisk in a major trial. That sent obesity-drug stocks lower. It's a reminder that the space is binary. Trial readouts can blow up or boost valuations quickly.
Yeah, trial risk makes biotech a high-variance bet. Short reaction, big move.
Not what anyone expected.
Let's move into some of the biggest individual news items and why they mattered. First up, the $3.4 billion take private in real estate.
That one was significant. A $3.4 billion take private signaled private capital's appetite for quality, real assets. Logistics and residential were particularly attractive. It offered a valuation floor for public REITs with steady cash flows, while office and retail assets without clear paths to recovery stayed out of favor.
And pending home sales were up 4.6% year over year, which supports parts of real estate.
Exactly. Housing demand pockets and that private transaction together made the real estate tape feel constructive, but still very heterogeneous.
Next big move. IBM took a hit amid allegations involving Anthropic and renewed regulatory scrutiny. How should listeners interpret that?
The sell-off reflected a couple things. Legal and reputational risk in the AI supply chain can hit big enterprise names, not just startups. Until antitrust and AI regulatory frameworks are clearer, episodic pullbacks like this are to be expected. It's a reminder to watch counterparty and contract exposure when owning enterprise AI names.
Crypto was mixed today. Some institutionalization, but also regulatory concerns. What was the tape there?
There were positives, like a new super app launch on Near, and some institutional staking deals, but compliance and exchange liquidation headlines kept volatility high. The takeaway? Institutional infrastructure matters, but regulatory risk means crypto should be treated as tactical for most portfolios.
Right. Small, tactical allocations, if at all. Short reaction. Right.
Yeah, absolutely.
Let's get practical. Based on today's tape, what are you telling investors to buy and what to steer clear of?
Tilt into AI infrastructure, but be picky. Buy select chip makers, GPU suppliers, hyperscale cloud names, and data center REITs with clear expansion plans. Favor companies with predictable revenue and long-term contracts, rather than early-stage AI plays. For energy transition, look at long-duration storage providers, transmission sensor suppliers, and CCUS service firms. But watch execution timelines.
And in consumer and healthcare?
In consumer, favor retailers with omni-channel strength, vertical supply chains, and pricing power. Avoid import-heavy discounters until tariff impacts are clearer. In healthcare, favor companies with diversified pipelines, regulatory clarity, or durable commercial franchises. Devices and diagnostics are examples. Avoid binary, trial-dependent names without cash runway.
What about real estate and materials?
Use real estate selectively. Overweight industrial and logistics REITs and residential finance, where deal activity and pending home sales supported momentum. Avoid downtown office assets lacking refinancing plans. For materials, consolidation and recycling investments are positives. Copper M&A chatter and government refurbishments point to structural tailwinds from electrification.
Good. And risk management. Any rules of thumb from today?
Keep a tactical cash buffer for headline dips. Use options to hedge concentrated positions in names sensitive to regulation or trials, and size crypto positions for double-digit intraday swings. Also prioritize balance sheets and recurring revenue where possible.
Let's talk about the cross-sector themes to watch. AI as connective tissue, energy transition, tariffs, and capital reallocation. Any one theme you think matters most over the next several quarters?
AI. It's the single strongest cross-sector force. It's reshaping CapEx plans, boosting demand for chips and data centers, and feeding into industrial automation. But policy and regulation are the wildcards. Antitrust or AI enforcement could change leadership quickly.
And tariffs were clearly a driver today. If trade policy tightened further, what would that do?
Further tariffs would deepen pressure on consumer retail and global supply chains, likely compressing margins and forcing price increases or additional supply chain shifts. It would also favor domestically sourced or vertically integrated players.
We covered a lot. Before we wrap, a quick checklist. 3 clear takeaways for listeners to act on tomorrow.
1. Overweight AI infrastructure and data center exposure, but pick names with visibility into revenue and contracts. 2. Position for energy transition. Storage, sensors, and transmission are durable opportunities, but mind execution timelines. 3. Be selective in consumer and healthcare. Tariffs and trial outcomes are creating dispersion, so favor balance sheet strength and diversified revenue.
Great. Anything else you'd add about positioning or short-term watches?
Watch upcoming trade clarifications on that 15% tariff. Any follow-up on regulatory headlines around AI. And next week's corporate capital allocation moves. Further hyperscaler cloud commitments or M&A in materials and real estate could be market movers.
One last bite-sized tip. Keep some powder dry for policy or clinical scares. Markets closed today with plenty of headline risk still alive.
Absolutely. Tactical cash and hedges make sense right now.
All right, quick reactions. Noted themes make sense?
Yep.
Big picture. Thematic plus active selection beats passive now?
That's right.
Okay, Tom. Thanks for the clarity. Final words for listeners?
Stick with themes where execution is visible. AI infrastructure and energy transition. But size positions, watch policy risk, and be ready to act on dips.
Perfect. That wraps today's Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time.